this episode, the ninth day of my consistency challenge. Today, I'm already on the charts, looking out for my trading, looking out for trading opportunity based on setup I usually trade. Before I look out for the setup, let me draw out the setup so that anyone watching this can have a basic understanding of what I'm looking out for in the market. For a sell set, I'm looking for this market structure to happen if I can actually take a sell opportunity. I want to have this break of structure, another break of structure, making two. Then price should take out the high of the second break of structure to have another break of structure. So now we have three break of structure, and this must happen before the London session, before 8 a.m. Nigerian time. So once this happen before 8 a.m. Nigerian time, then I'll be looking out for the trading opportunity immediately the London session opens. That's why I'm usually on the chart 7:45 a.m. before 8 a.m. so that I can go through the charts and see if I'm going to have a trading opportunity. So I expect a pullback into the supply zone, other block, whatever, before picking my entry. Then I sell target 3 hour. So this is for a sell setup. For a buy setup, I'm expecting something like this. Then we have one break of structure, pull back, another break of structure, making two break of structure, then taking out the low of the second break of structure. Then we have our third break of structure. This must happen before London session. So immediately the market open, I'm going to set my limits and I expect it to pull back into the demand zone or FUG, or I usually look out for WFUG to pick the entry in case I want to use FUG, WFUG, or other block. So and I expect it buy. This must happen the session opens. So now I'm already on this is odd USD chart. So let's see if we are going to have a trading opportunity on odd, okay, USD. For simplicity's sake, I'm going to draw out the pattern. I'm doing all these things because of those people that are watching this and those that will come back and watch it so that they can understand what I'm looking out for and they can also replicate it in the trading strategy as well. So let's start from what do we have? Okay, what I can see here, let me I can see a bigger picture. Let me delete this. I can see a bigger picture. So let's pick it from here. Okay. So we have this. That's coming from here. I'm seeing a bigger picture. Then we have this. We have this. We have this. Now, how many bigger structure? Making two. Okay. One. Okay. We have this pullback. Then we have this eye. Then we have this as well. So looking at this, we are expecting a break of structure. Once we have a break of structure here, then we can actually look out for a pullback into the last candle of the structure, and we expect it to buy higher. That's what we are actually looking out for. That's what we'll be looking out for. Now, what I've just drawn out now, compare it with what is here with this. Is it not the same thing? So make a comparison between the two. Is it not the same thing? We have this break of structure here. Price took out this high. Price also took out this high as well. Then price came down and took out this low. And we are expecting price to go up and take out this high as well. Once this happened, so we are expecting it to pull back, then continue the buy. Now, before we can actually consider this low to be valid as well, you can see this WFG here, which price react to. Let me zoom it out so that you can see that there is WFG there. Looking at this red candle, this red candle here, okay, has an FTP. The same thing with this green candle as well. It also has an FVG. So the LVG are on the same side, like they are aligned. That's why I call it double FUG. So, and that is where price actually reacted from. So we are expecting it to go and take out the high. The moment it takes out the high, we are expecting it to pull back, then we buy. So we will still wait for price to actually give us the entry on this pair. For now, we can't set a limit, because price can, it is possible for price not to take out the high, and it is possible for it to actually take out the high. So anything that is going to happen, we can't actually determine it, but we wait to see what is going to happen. Okay, let's pick another pair. Let's check another pair. Euro USD. Okay, this is Euro USD. Okay, okay, looking at Euro USD, let me draw out this. Okay, let me just pick it from here. So we have this, the price pullback, quick the structure, went up, down, then boom. You have this, then down again, then going up. So what we have on Euro USD does not meet our trading criteria. At this bin, we have something like this. 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 Uh, then we would have been waiting for him to take out the high, then set our lead for a buy. But we don't have something like that. So there is no trading opportunity here as well. This particular short can mean it's actually pulled back for it. Like, because I'm not considering this. It is not the kind of, it's not a good, it's not a structure. Let me put it that way. It's not a structure that I can consider to be valid. That's why I'm not going to consider it. So at least it is a nice structure. We see a clear pullback. Then I can consider it to be a structure and a break of structure. So let's check other currency pair to see if we are going to have a second there. Okay. Yeah. We have this. You can see this. Compare this pullback with the other one we have there. It is quite different. As you can see. Then we have this. Mhm. Just we have this. We have this. Yeah. Looking at this, market took out this low. We have this break structure. We have Then D is the third one. However, let's consider what is here. This minor structure. Here, all this area, the pool of liquidity like equal lows, which price is likely to come back and clear out. The is it network? Okay. Yeah, relative equal lows. So it's a pool of liquidity which price is likely to come back and clear. So now let's consider the internal structure. We have this, take now this I, this take out this I, one, and this also took out this I. One, two. Then price came back. It did not clear this. So like it does not actually follow our pattern. Let me put it that way. So there is no trading opportunity here as well. There is no trading opportunity here. If I am to consider the structure from this area, from here, say okay, price came back into this last candle, mitigate it to break this structure here, to break this structure here. Then this would have been the point of mitigation, clearing out that inducement, then buy. Like, but as it is, it doesn't follow what we are actually looking out for. So there is no trading opportunity here as well. There is no trading opportunity on NSD USD as well. So let's see. Okay, this is GBP USD. Let's see what we have here. So we have this. Let me take it from here. Price came down, then went up. This is where to actually take out that I. But I'm still going to consider the internal structure to explain some things. Now looking at this, let's consider the structure. Like we have this eye, that is where let's actually take out the eye. Then I also came back to take out this loop. Okay. So like on GBPUSD as well, I don't have a trading setup. I don't have a trading opportunity. I'm not going to consider this to be my trading opportunity, to be my setup. Following the logic, we have this structure here. Then this eye, we have this pullback for price going up. Okay, let's see. So after going up, we have this pullback and a break of structure. Then price took out the low. Then price took out the low. After taking out the low, we are expecting a break of structure over there. This is I'm still looking at it to see. I'm not going to take this trade, but I'm going to observe what will happen afterward. This is what I'm expecting. After taking out the eye, I'm expecting a kind of pullback like this. Then, but I'm going to observe what is going to happen rather than just taking a risk. So I'm going to observe what is going to happen on this pair to see if it will play out to learn from it rather than putting my money to risk. So let's check odd USD again. So odd USD is here to give us any entry. Today as well, I may not take any trade because I don't have what actually looking out for. Normally, what I'm looking out for is the structure being formed before London session. So London session is only meant for execution for me. So the setup, I would have the setup during Tokyo session. So the only thing I just do when I come to the chart is just to look out for the setup, then set my limits and close the chart for the day. So something around that 12 to 4 at time I usually check what's going on, if the trade has been activated. If it hasn't been activated and it's already like 4 o'clock or 3:45, 3:50, then delete the limit if it hasn't been activated. But if it has been activated, I just leave it to ATP. When it is 2 hour, I set my break even. Sometimes, based on back testing, sometimes price can actually pull back into the entry before going to the direction to hit the TP. So I have two options there. It is either I set the break even, or I leave it to run. Regardless, I'm still going to make more back testing to make the final decision. For now, I'm going to set my break even after 2 hours so that I don't lose the money I've made earlier. But however, based on my backtesting results, whatever I get based on the backtesting results, that will inform my decision. Maybe to leave the price to run, like it will be profit, and it later come back and clear me out, no problem. And as much as my win rate is intact, and I know I'm going to recover everything. So for today, at the moment, I don't have a kind of setup I can actually place a trade for, but I'm still watching what the market is going to do. So if based on the kind of trader I want to become, the plan is to just come on charts within 15 minutes between 7:45 to 8 a.m. in the morning. Look for the setup. If it is present during that period, set my limit, close the chart by 4. By 3:50, check it again. If it has been activated or not, TP or SL, whatever. If it hasn't been activated, delete the limit by that time. If it has been activated, SL or TP. That's the plan. That's the kind of thing that I'm trying to build to become. So based on that, today it is likely that I'm not going to take any trade because the setup I'm looking for hasn't been formed to give me the actual thing that I want. So thank you. Thank you for your time. I hope you've learned one or two things. Have a wonderful and profitable day.